months because I've been a little bit busy, but I'm glad to be back doing these, and I'm also very thankful to FX Street for the award they gave me earlier. So the least I could do is start doing some webinars again. If you've joined me before, then you'll know what I usually do here is just plough through all the different markets that I cover, but I'll also look at any other market you'd like me to look at. So if you've got your eye on something or you've got a position in something and you want me to check it out for you, I'll be happy to do my best to analyse it and give you the best opinion that I can. But while I wait for you to throw some suggestions at me, I'll just crack on with a few things that I've got caught my eye and that I think are worth bringing to your attention. I've got the S&P up here at the moment, E-mini S&P, and I've been really focused on the US stock markets recently. If you follow my free articles on my website, or even if you're a subscriber to the reports, then you'll know that I've been looking for this, the US markets anyway, to top out. Obviously, Europe's become a different scenario entirely now, what with the QE situation going on, and they're too dangerous to sell. But the US stock markets had looked like they would top out. And if you read my article from 2 weeks ago, I'll actually just show you the weekly chart. There was a few trend lines that caught my eye. We were so overbought. I was really looking for a reason for the market to top out. And this trend line along here, sorry, there's a bit of noise in the background. There's a bit of work going on. This trend line back there, going back to sort of July of 2014, was the one that really caught my attention. A longer-term trend line is obviously always more important. So I was looking for us to struggle around there. Well, you can just see if I just open the chart up, actually. There you go. You can just see there that there was we halted just below it. Anyway, that was the first warning signal to me. Obviously, we got overbought, but you never pay too much attention to that. That's not very useful for timing purposes, stochastic. So I'll just move on to the daily chart and show you what was going on there. Sorry about the noise. Okay, so you can see that we had a rising wedge pattern, really, was what I was looking at. Once that was broken, that gave me the hint that what I thought was going to happen would happen. We also had this little trend line going back here to November, so that was obviously also important. So once we got through, once we failed there, which I had a feeling we would, I actually had 21.15.20 as the level. Then it was, it was a good chance we were going to go lower. So fortunately, we did do that. I must say, I didn't expect the trigger to be the non-farm number on Friday. If I'd have known that non-farm number was going to be as strong as it was, I probably would have been thinking I'd got that completely wrong. But there you go. When technicals point to a potential move, you never know what the fundamental trigger will be. But I've seen this time and time again, and over the years, something triggers the move that you're expecting eventually. And how odd that it would be a much stronger non-farm payroll number, which I must admit I would have thought would have sent the market higher. But you never know what the market is going to focus on. And the market decided to focus on higher rates being a negative and sold off quite dramatically. So we got the move that we expected. It just wasn't the trigger that I had expected. You can see from the chart, sort of 2060, 2065, 2062 area is good support. You can see that just from trend lines and fibs. It's not rocket science. So we went straight there on Friday after we broke. Let me see now, what was that level? After we broke the mid 2080 area, the 2085, 2084 area. Once that was broken, then obviously the market tumbled to the next support. So this is what's going to be key now, 2065, 2062 area. If we cannot hold above there, and I've got a feeling we will continue to go lower, actually. I'll show you some reasons why I think that in a minute, but I think we've got further to go. It's just looking for my next target. So my next target will be down around the 2045 area. You can see that just from the fibs on there. That looks like the next place we're going to go, in my opinion. I favour a move back down below 2060. Actually, I've got a small short position on. I've been talking about selling in this market, and I've also been talking through my webinars and on my reports about buying some volatility. I think the VIX got way too cheap. There was a lot of complacency in the market. I know one or two of you actually did do that trade, so I think you're on the right side of it now. And I think that's worth running just a little bit further. As I say, I think we could C2045 area. I actually wouldn't rule out a dip as far as 2028, 2026 area. That's actually very, very good support. And I think that that would be the end of the correction at this stage. I'm worried about moves to the downside in Q3, but I think maybe for March that will be it. We'll stage a recovery into the end of March, and then we'll just have to see what develops from there. I would be concerned about a big double top pattern, and then we sell off something more significant. I really am worried about the downside this year, but I won't go into that now. You may have read what I've been writing on my website, and you probably have an idea of what I'm thinking anyway. But anyway, for this leg lower, yeah, I wouldn't be surprised to see. Well, we've got the 100-day moving average down here. It's slowly climbing 2034. Wouldn't be surprised to see that tested. And then anywhere in the mid-20s, I'd say that should be a decent bounce. We could see that this week. You've got a little trend line here just to back up that idea. You've actually got some cloud support. You've got a little bit of fib support short-term, but you've also got some long-term fib support there as well. And if we were to go down for another 2 or 3 days, then I imagine this stochastic would start looking quite oversold as well, which would help back up the theory that when markets gets oversold in a bull trend, then it's always worth trying a long. So that's what I'm thinking for the E-mini S&P. And yeah, at the moment we are still in the bull trend. And until I see a more longer term negative pattern, I'm not going to bet against the trend. That is never a wise idea. I'll flick onto some other markets just to show you how the US is sort of panning out across 3 or 4 different markets. So the Russell is worth looking at, the mini Russell. And the main reason is I've just flicked up the weekly chart here. This is a warning. We made a new all-time high last week. This is the weekly chart. We made a new all-time high. Where did we get up to? 1243.6. There we go. But of course, we closed lower. We took out the previous week's low of 1218. We got down to 1214 on Friday. We haven't staged much of a recovery at all from there. What have we got the week before? 1214 was the low. So we're testing the 2-week low. And that obviously, I'm sure you're aware, isn't the most positive candle you could hope for, having hit a new all-time high to then close below the previous week's low. Not the most positive candle. Again, I only think that this is going to be a short-term correction. I don't think this is the start of a big collapse or any sort of big sell-off yet, but we've got to be very careful. The daily chart also had this nice little rising wedge pattern, and once that was broken, it was it's all fairly textbook. Broke the rising wedge, headed lower, so it did what we were looking for, really. We're now trading below 1221, which is a little fib support in the very short term anyway. Nothing too important there, but still worth noting. And as long as we stay below there, we've got a little bit of pressure. So this sort of also backs up the theory that maybe these US stock markets are going to see the correction that we were looking for over the last week or two. Thankfully, but nothing too serious. I'll just have a look at the Nasdaq as well. The Nasdaq was particularly strong. It really did push on a little bit longer than the other markets. I guess the composite had to just test that 5,000 level. It's such a big one. Traders do like to test these big levels. Why wouldn't you go for it? And the E-mini got to 44.79. So actually that got pretty close too. Okay, so then we again we have to look at the weekly candle because this is where the important action is at the moment. So a similar picture to the Russell made it was not a new all-time high, but certainly a new high for this bull market that's been going for several years now. 44.83.25 turned around, closed below the previous week's low, and we're halfway through the candle from the 2 weeks ago. Again, not the most positive picture. You can see how we hit trend line resistance, and this is where I was calling for a top. Actually, you can see the reason why. It's just a trend line. We hit it. We got very overbought, and coupled with all the other things I was seeing in the other markets, I really did think that we could turn around from there. And as it happened, we did do that. So yeah, I think there's going to be a little bit of pressure to the downside this week. Maybe not any further than this week, but I'm looking for more of a sell-off, and it will provide a buying opportunity. There's some good levels to be looking to get in here and look for the next bounce. The bulls won't give in easily. There will be buying on dips. It's going to take a lot more than that to change this trend. what you probably will see is markets get a lot more volatile over the next few weeks. If my theory of a trend change in the longer term is correct, markets get a lot more volatile. We'll build into a negative pattern. There should be plenty of warning signs for technical followers to see that there's a good chance of a trend change. Right now, that isn't happening, but I've got a feeling we will see those. But only time will tell. Don't jump the gun. Don't try and think you know better than the market. The market will tell you what it's going to do. So we just wait and see. Again, E-mini Dow Jones, similar sort of thing here. You can see that candle. We reached a new all-time high of 18,002 through the 18,000 level, and couldn't be sustained. So the new all-time high last week, same as the other markets that you just seen. We reversed that again, took out the previous week's action and actually almost 2 weeks worth of action. Let me see, the low there was 17,853. Last week we got down to 17,811 on Friday night, and obviously with the week close and everything else, the week close on the week, the close on the week right near the low of the week, that really is a negative candle there and signals some more profit taking in store for us this week. Okay, so I think I've probably said enough about that. It's all fairly obvious. I'm not going to bother to look at the DAX because that just keeps going higher. We're off a little bit today, but I don't see anything particularly negative about that yet. It's all a QE thing, and there's just no point in betting against 60 billion or whatever they're pumping into the market every month. It certainly wasn't worth betting against that in the US when they were pumping money in. And it doesn't look like it's going to be worth doing that in Europe either, although their European markets are off a bit today. FTSE's a bit of an exception, doesn't look that strong. I'll just quickly show you the chart. I don't have an awful lot to say about the FTSE, but it's certainly not been able to keep pace with the Euro stocks and the DAX, which are the other two European markets that I follow, or the CAC actually. And I'm not too confident about the FTSE. There you go. Last week's last week's candle. Sorry, again, not very positive. The spike higher, lower close. These are not particularly positive formations. These two candles here. So, I think the FTSE, if anything, is going to more likely follow the US markets than the DAX. And obviously, if you've got any questions about stock markets, let me know. But I won't go on those anymore. You get the picture. Gold, that's definitely worth a look. Simon, I know you bought into that volatility idea that I had in E-mini S&P, so hopefully that went your way on Friday at least, if you still had the position on. Okay, here we go. Gold. Well, it's not looked positive for a long time. Actually, this weekly chart's quite interesting. I wasn't actually going to start with a weekly chart, but it's worth having a look at it. We are in obviously a negative trend. We have been for quite a while. We managed a good little bounce here. Look how nicely that 100-week moving average worked. I remember that was 1308. We called the double bottom and we looked for a recovery. We did get that, and that 100-week moving average. This is why you've got to keep an eye on these longer-term charts. The 100-week moving average held that bounce in a bear trend quite nicely. I must admit, I was thinking that was more than a bounce in a bear trend at that time. I did think that 100-week moving average would hold, but I did think that also we could pull back and rally again. Anyway, that wasn't to be the case. We've tumbled, and it really does look weak now. And I just can't see anything positive about gold. Best we can hope for is it continues to range sideways. You can see from the weekly chart that, in effect, I suppose you could say we are ranging sideways, but it just doesn't look good. And I wouldn't be at all surprised to see a retest of those December, November lows that we put in last year. Sorry about the racket in the background. Okay, so this is the daily chart. There's a lot of red on that screen through February and the beginning of March. There's nothing to tell me that that's about to reverse. Getting slightly oversold. I mean, you would say that there's a bit of divergence there on the stochastics, but I really wouldn't pay too much attention to that. I think the real risks is to the downside, and trying to pick a bottom in this market is not the cleverest idea at all. You can see how the 100-day moving average did its job yet there. The blue line held in the beginning of February, and then once we got through that, worked as resistance. We never managed to close above it again, and then eventually triggered heavier losses. Of course, stronger dollar was the real big one on Friday, hit oil, hit gold, and I don't think you bet against a stronger dollar either at the moment. That's it for gold. Unless you've got any more questions. So I think any rally that you get in gold is a selling opportunity. Doesn't look positive at all. I've tried to look for bottoms in gold over the years, but it just seems to bounce, hit really important resistance levels, and come back again. So who knows? We might even break those recent lows that we saw as we go forward. There's nothing to tell me to buy gold at the moment. Okay, we'll switch to the currencies. We got this is the euro versus the dollar. Again, this is just one-way traffic. There's no reason to buy this at the moment. You stick with the bear trend. I know I've seen projections of we're going to parity. Well, I certainly wouldn't disagree with that. I can't see any reason to buy it. It's a very clear pattern. The market seems to go down, then head sideways for quite a long time, go lower again, head sideways before the next leg lower. You know, if that's the trend, if that's the pattern, it's fairly simple. Just stick with it. Don't try and make it difficult. Actually, I'll just scrunch this up a bit, and you can see. It's all we've done for getting on for nearly a year now. It's just head down, go sideways, head down, go sideways. Maybe a little bear flag every now and then, as we had there and there, but really a bit of a bear flag then, sideways and down. So yeah, there's absolutely nothing there to say that this market's about to turn around at the moment. We're very oversold at the moment, so maybe we get a short-term bounce. Right now I've got 109.05, 109.10 as our first resistance level for today. We've got pretty close. Well, we got to within 10 pips of it anyway. Actually, we got to within 6-7 pips of it. So yeah, I've got a feeling that could hold today. And I think selling into any rally would be advisable. We're oversold, but you can see that when the market gets oversold on the stochastics, at least, we don't really get much of a rally. If anything, it's mostly just a sideways action to unwind the oversold situation, and then we dump again. It's going to be the same sort of picture for cable. There you go, cable. Not dissimilar picture at all, is it really? Let me just move that along. We never really managed to get above the red cloud, and we've headed lower again. It's actually been quite a few days of sell-off. 1, 2, 3, 4, 5 days of quite a serious sell-off there. I mean, well, that had to happen. It was fairly obvious. But anyway, I'll come back to that in a minute. You can see the pattern down. That's a little bear flag down. Little bear flag here, side and then down, then sideways down. We did manage a good recovery here, though. That was nice. But again, the levels just work really nicely in these Forex markets. 155.50 worked beautifully. There was all the reason in the world to sell it there. It was a fib level. There was a 100-day moving average. We did manage to get short on that through our reports. And then that really did work nicely, in fact, because we had this little channel here. Once it was broken, it's a no-brainer. We've got the negative candle here, which failed at strong resistance, as it should have done. We got the negative signal. We went sideways for a day or two and then plunged. And, of course, that accelerated on Friday with the non-farm payroll and the talk of higher rates, a stronger dollar, getting some sort of recovery today. But you can see, if I just move that up, there's a longer-term trend line there going back to the middle or end of October. So what we're bouncing up to there today. There's a good chance that trend line will hold and will continue lower. Again, I don't see anything positive, any reason to be looking for a turnaround in cable at the moment. It's all a case of stronger dollar, and it's been that trend for a long time, hasn't it? I wouldn't be looking to do anything else but sell into these rallies at the moment and stick with a strong dollar theme. If anything, now that the market's focused more on the reality of higher rates in the US, I guess we could see even perhaps accelerated moves to the downside. Who knows? Timing is something I'm not brilliant at, and speed of the move is something I'm not brilliant at. But the levels certainly do seem to work and the patterns seem to work. So I think you just got to stick with that. Sorry, they're making a hell of a racket in the background. Okay, the Aussie dollar. There you go. Again, not a dissimilar picture. We go down, we go sideways. I'll scrunch this up a little bit. Yeah, it's all a dollar. It's all a strong dollar thing, isn't it? This is one of the pairs that I cover. So I'm just showing you how this has worked. Sideways down. This actually was one of the out of those three pairs. This is one of the last ones to crack, but certainly did crack. And when it did, we tumbled quite heavily. Sideways down, little bear flag there, down, sideways down. We've had a long sideways movement here again, well over a month, getting on for 5 weeks anyway. What did we get here? 1, 2, 3, 4, 5. Yeah, about 5 weeks on this little pattern here where we went sideways. 1, 2, 3, 4 and a bit weeks on this one. So I think we're overdue for a move down now in the Aussie. Again, nothing to say that we're going to turn around and go up. I think you stick with the pattern. We've gone sideways for long enough. And as I wrote at the end of last week, I think we start to head lower. And of course, we did do that on Friday. I don't see any reason why we can't test these February lows and maybe break these and go lower again. And I do think that any rally is a selling opportunity in this pair. I'll have a look at the dollar yen because that's the last pair that I cover on a daily basis for subscribers. This has actually been quite tricky because in effect, it has trended higher, but it's such a slow rate. It's been a real problem. It's probably easier if I blow this up a little bit and you can see things a little bit more clearly. Okay, do that, and do that. Okay, so this is sort of November, December that we're going back to, and in effect we have just gone sideways. But what you can at least say is since the middle of January, we've managed to start carving our way higher in a very non-aggressive bull trend. But that looks like it could be accelerating now. We're holding above this trend line. These trend lines are working quite nicely. If we can now push up, we've broken through February highs, which is what we had done. We need to hold above February highs now, 120 sort of 50 area. If we can hold above there, it looks like we're trading at 120.75 now, so we are holding above there. Today's low 120.58, so that's just above the February high, and it's also the holding above that trend line as well, so you can see why that's good support today. Hopefully we can hold above there. We're getting a bit overbought, but I wouldn't pay too much attention to that, and see if we can at least test last week's high. Obviously, if we push above there, that'll look quite good, and we can go on to at least test December highs, and then we'd need to beat that for the next leg higher. So it's looking all right. The dollar's not quite as strong here against the yen as it is against those other three pairs, but I still feel quite confident that we can see the dollar push a little bit higher gradually, maybe just continue that gradual bull trend. Okay, so that's all the currencies that I cover. If you want me to have a look at another pair, just give me a shout. I'll have a look. We've done gold in the stock markets. Let's have a look at some light crude, which again has not really been going anywhere, but I've got a feeling that's going to start breaking to the downside now. Okay, here we go. I'm pretty sure that this chart will remind you of the euro or cable, or even the Aussie. Just trying to move it along, hang on. Okay, yeah, I can look at those too. I'll just finish on this light crude and then I'll have a look at those currencies for you. Okay, yeah. So not dissimilar to some of the currency pairs with stronger dollar, uh, oil heading lower, possibly for different reasons than just a stronger dollar, as we know. But I'm not going to deal with the fundamentals. But again, down, sideways, down, sideways, down, sideways. Well, guess what? We've gone sideways now for 5 weeks or more, and I do think that oil will start to head lower now. We've got a bit of pressure from the cloud. We haven't been able to get above the 38.2% fib at 53.40, and we haven't actually managed to close above there at all. And I just think that sooner or later the bulls are going to give up trying to push oil higher, and we'll just collapse again down, probably to retest the January lows. We'll see what happens there. I suppose a double bottom pattern is always possible. That's really the only hope bulls will have to see a recovery in oil. But if we start breaking below these lows here, what have we got? 48.05, 47.80. And of course, the Febler at 47.36. Those are the three levels to look for. We start breaking below there. It looks like we could accelerate quite quickly to the downside and test those January lows. Obviously, that will be the next big test if they hold and we get what you could describe as a double bottom. Not a very convincing one, I'd have to say. Then maybe we can get some sort of recovery. But right now, I don't see anything positive about oil, and I really do think we're going to see it heading lower, along with those other currencies against the dollar. Euro GBP, yeah, let's have a look at that. Brent crude, all right, I'll tell you what, I'll do Brent crude because I'm looking at WTI anyway, so I might as well stick with the oil theme. It's a similar picture, of course, to WTI. Okay, here we go. Actually, Brent crude managed a much better recovery, didn't it? Let me just have a look at the weekly chart here, because I think it did hold some levels that were worth pointing out. Just let me refresh my memory. Let me see if I can move it along. Come on. There we go. Yeah, okay, there you go. It's traded quite nicely, isn't it? The whole move down from June. You see, we got a much nicer bounce in Brent than we did in WTI. Not sure why that was. We did manage to test 61.82, that sort of 61.50, 61.80 fib resistance area, and that worked nicely. We only managed 1 week where we closed above it, 62.83. But you can see on the grand scale of things, it was well within a margin of error that you might have on a stop. If you were going to be using 100 tick stop or more, then you would have just about held on to that position. And it looks like we're going to head lower now. We've got almost a rounding top really there, but you can see failure to get through that should push us lower again. We've managed to get overbought actually on the weekly chart, would you believe, just by doing that. So we unwound that very oversold situation that had been going on for months. We hit important fib resistance. We've become overbought on the weekly chart. This is all pointing to a negative outlook for me for Brent crude, which matches what I'm saying about WTI. Let's get the daily chart up. Ooh, what's going on here? Oh, there we go. Okay, so yeah, similar to the currencies, similar to the dollar pairs, similar to WTI, in that we've just been heading lower since June 2014, down, sideways, down, sideways, down, sideways, down, sideways, down, sideways. Okay, you can see the pattern. However, we have had a good recovery, but you can see why we topped out there. I just showed you that on the weekly chart, the very good reason why that market failed to get any higher than that. I'm now going to blow this up a little bit so we can have a look at a more shorter term picture. There we go. Okay, good rally. Good recovery. We've got a double top now around that important weekly resistance that I just showed you. So it doesn't look too positive. That helps back up, the other 2 or 3 points I had as to why Brent looks like it's going to go lower. Double top on as well. So that's, I think, another fourth factor. We've got this trend line here, which we've been hovering around, but eventually convincingly broke down below. The big one now is the 58.80 level. We're closing in on that. You can see it's the first 23.5% fib support, so that's an obvious level for anyone who looks at charts. Then we've got these little lows here at the end of February, and this here, 57.80. This little spike down won't take much to push us through there, I don't think. What's this gap? 57.50, 57.80. Okay, so that would be an obvious level to watch. That gap there. Once we're through there, we'll head lower. But yeah, I do fancy this to go down. Really, I think that is just a recovery in a bear trend. A nice recovery. It did do well, but that's how I see it. Oops, didn't mean to do that. So yeah, I'm looking for oil to go low. I don't think there's many people that are. Everything I seem to read is hedge funds are looking for it to rally. Retail is buying a load of oil funds. So I don't know. Maybe I'm the only guy that's wrong, and everyone else is right. But I can only tell you what I see in the chart, and it doesn't look good to me. Okay. Oh, obviously, if we were to close above 6,300, then maybe I'd start to change my mind. But right now, this is telling me that there's more chance of us going down than up. If we resume moving to the downside, where do you think we end up? Okay, good question. Well, the fibs are the easy way to figure out where some decent targets are. So 56.20 is an obvious level. The 50% fib is. Hang on, let me blow this up again. It's difficult to see anything particularly long term. But let me give you the B levels. You can put the fibs on your own chart, and they're fairly obvious. They fit in quite nicely with the price action as well. Anyway, so I've got confidence in these levels. 58.80, 58.80. What's the high here? 58.06. So anywhere in the 58.80 down to the low 58 area is going to be the one to watch. We get through 58.00. That's going to add a lot of pressure. We've got 56.20 as the next fib level. And then we've got this 50% at 54.10. Perhaps we can get down to 52.00. That's quite decent support. You can see 61.8% fibs are always worth paying attention to. But of course, if we continue lower, then you've got this area up here, 50.60, 50.50 area. That would be the next one. Some little highs up here. Then you've got these little lows down here, and of course, if that fails, we've got the low in January. You got to take the levels. You got to take each day as it comes. Really, with oil, it's obviously quite in the news, and you never know who's going to do what. But the oil rig count is obviously collapsing very much. I'm sure you keep an eye on that. If you tried oil, you keep an eye on the oil rig count, and that has absolutely collapsed. But it doesn't seem to be helping oil at the moment. So I think it looks like we need at least another shakeout in oil. I wouldn't be surprised to see it retest the January lows. That would be a more convincing double bottom, actually, if we got it. I would just like the shape of it a bit more, and I'd have a bit more confidence in Brent down at. In fact, I probably would try along down there at 45.20. That could be quite a convincing double bottom. But we'll have to just see as we get close to it, see what candle formations we get down there, see if there's any patterns on the shorter term charts to give us some confidence in that. I can't really say much more about it at the moment, otherwise I'm negative on it. Those are the targets, and let's see if we get a big double bottom out of it, really. Selling it with a trailing stop's probably the right strategy. And as I say, a break above the double top high and 63.00, that would change my mind. We could at least then go for the 100-day moving average around 65.00 area. Okay, I've now got to have a look at my pleasure, Peter. We'll now have a look at Euro GBP. Let's do that. Okay, it's loading. Okay, we've got another 10 minutes. I should be able to do at least these two currency pairs. Sorry if I talk too fast. I do tend to waffle on and talk very quickly, but these are often recorded. There's been a racket in the background, so I'm sorry about that today. Okay, I haven't looked at this for a long time, but it's hardly a surprise that the euro's weaker. I think I better have a look at some longer term charts just to get my bearings on this one. If I can just open it out, please. Come on. Why is this not letting me open up? Okay, that's not good. Let's just do it this way. Wow. Okay, well, there's nothing positive about that, is there? Um, Very oversold. Certainly no reason to buy it. Are we at record lows in this pair? No, no, we're not. Okay, but we're certainly back into 2008 territory. Oh, okay, not that far back really, when you consider that the euro versus the dollar's back at 2003 levels, if I'm not mistaken. Um, okay, well, obviously you've got to go all the way back to 2008 to see the price action. Oh, you can't hear the racket. Good. Well, it was earlier on, but anyway. Okay, so we try and make some sense of this. Okay, so we've got from the 2007 low, we've got a 78.6% fib at 72.34. So we're just breaking below that on Friday and holding below it now. So that certainly isn't a positive. In fact, let's just have a look at 2007, really. It's the obvious thing to do, isn't it? Here we go. I used to live in Spain actually for many, many years. And just before I left, the euro really had strengthened quite a lot against the pound. Since I've gone, the euro's collapsed. And all my friends there are quite happy. Um, Happy with that, obviously. Right, okay, so we're trading around 72.00 at the moment. That's below the 72% fib. Okay, yeah, that doesn't look good based on these 2007 levels, does it? Because we're holding below all these little highs here. These are weekly highs as well, 72.16, 71.96, 72.39, 72.20. So you can see that sort of 72.20 areas, fairly important on the weekly chart. Certainly holding below 72.30 isn't going to be very positive. We do seem to be doing that. So, yeah, there's not really much I can say. There's nothing there's nothing trend line wise I can put on that on the weekly chart because we've just collapsed, and it's just a case of looks like it's going lower. 71.12, 70.87. These are these little lows here. They're worth keeping an eye on. 70.20 high there, 70.29 high there. That's what I would be looking for next, really. And what have we got up here? 70.20. Yeah, so 70.30, 70.20 is definitely that little area there. And these little lows here are 71.12, 70.87. So it looks like that's where we're going, really. When you see a market that's just collapsing like this, the last thing you want to do is stand in front of a steam train, and there's just no reason to do that right now. We're just getting quite severely oversold, it would have to be said, but that alone is just no reason to buy this. So I think you've got to stick to selling into rallies, and until we see something more convincing that tells me, whoops, didn't mean to do that. Sorry, the racket's back. Yeah, until we can see something a bit more convincing. Why is that chart done that? That's really annoying. Hang on, just let me try and reset that. This is a really good platform. Metastock's very good. Icon's very good. But every now and then it does something really irritating, and it's just doing it right now. I wish it wouldn't do that. Just changed all the colours and everything else. Ugh, how annoying. Okay, never mind. It's a great platform until it starts messing up like that. We just hit 61.8 fib of the total move. Okay. What is wrong with this stupid platform? I can't open up the screen or anything. Okay. It's gone haywire on me. Let's have a look at the dollar. There we go. Next one. Actually, I'm actually going to Restore workspace. There we go. Sorry, might take a second. What charts are these? Do you mean what platform? This is Metastock Icon, which is really good. The data is really reliable, so that's obviously the most important thing when you're studying charts. I do like it. I can actually get you a free trial of it if you're interested. I actually can get you a discount as well. Just email me if you're interested in having a free trial of it. Oh, hang on. I sent that privately, have I? Didn't mean to do that. There we go. Here's my email address. If you want to give it a try, you're more than welcome. I'll set you up with free trial and discount and all that kind of stuff. Actually, on that subject, if you don't follow me on Twitter, may I suggest that you do, because today... Hang on. Ugh. Day trade signals. We've got a big offer. It's the biggest offer we've ever done. It's to celebrate the fact that we've got 4,000 Twitter followers. There's a load of free training. Go and have a look at what I've posted on Twitter today. What's going on here? Have a look at what I've posted on Twitter today. The place is limited. I hope this place is left. They may have already gone. But if they haven't, there's £500 worth of free training with a subscription. And places are going fast. You can get the link off Twitter. Okay. These charts have gone haywire. I just need them to work for another 3 minutes until the end of the webinar. Okay, this looks better. Wow, okay. Interesting. Okay, here we go. Let's have a look at the long-term charts. Start with a monthly. Oops. Well, that's a bull run and a half since 2011. And we're actually getting through the highs of 2008. That was high was 1185. We're trading 1203. So certainly not going to bet against this bull market. Where are we going to? 1216. We've got very close to that little spike higher there. And if we can get through that, oh, sorry, the racket started again. Then we're looking at 1260 and 1381. I mean, there's just nothing to say on that monthly chart anyway that that we should bet against this bull trend. That is really, really a strong one. No, I really wouldn't want to be trying to pick a top in this one. The rule is, stick with the bull trend. Yeah, look, even that trend line worked beautifully, didn't it? That was 2013, 2014. Broke it, came back, gave you buying opportunity. Off we go again. Okay. Yeah, the rule, trend following systems do work for a reason. And if you've been trend following over the past 8 months, you'll have done very, very well. And you certainly wouldn't want to bet against this trend. Let's have a look at the weekly chart just in case there's something we should know about. No, not really. Nice that we're pushing above these little highs here. 1181. These little spikes that didn't manage to hold. 1181, 1189. So now that we're holding above there, that's certainly positive. Looks good. Let's throw some trend lines on here. Okay, you can see that trend line work quite nicely. We're pushing above that now, so that's going to be support around the 1195, 1190 area at the moment. So as long as we hold above that, just looks good. I wouldn't be trying to pick a top in it, that's for sure. Okay, that's the only cloud on the horizon, this little trend line here in 1218. Oh, 1218, that coincides with that little spike we had somewhere on that monthly chart, didn't we? Where was it? Back here. This one. 1260, this little one here, was it? 1216, there you go. That monthly little spike that wasn't held. So 1216, 1220 area is the one to watch now. We're going to have to get through that convincingly, see a weekly close above it to be sure of the next leg higher. Yeah, that's the cloud on the horizon, I'd say. Can't see any other reason why you wouldn't be positive on this. Why has that done that? Yeah, there's no point in me analysing that anymore. It just looks good. Okay, so we've just got to hold above 1195, 1192. We've got to get through 1220, and then we're off to 1280, 1260 rather, and then probably eventually a retest. Well, get up towards 1381. I'm not saying we'll definitely get there. Let's look at the daily chart. No, that looks good as well. That looks very good indeed. ZAR, I don't even know what that is. That's a South African currency, isn't it? So I guess that makes sense. Commodity currency, is it? So yeah, I guess the fundamentals would explain the reason why we're seeing some good dollar strength against that one. Getting a bit overbought on the daily chart, but hey, look, I just can't see anything negative about this one, as I've said. Okay, so I think I'm supposed to wrap it up after 45 minutes. It's 9:46, which I think means that's the end. As I say, have a look at what I'm posting on Twitter, because there's a huge offer, and most of the places have actually gone. But if you are thinking about a subscription, now is definitely the time to do it, because you're going to get £500 worth of free training with me in 3 webinars where you can learn what I do and lots of other stuff. Ask me tons of questions, and yeah, it really is a good deal. I like to do things like that. And there you've got my email address. If you want to contact me with anything else or contact me through Twitter, please do. I guess that's all I can say at the moment. So I'll wait to hear from you. Thanks very much. Look forward to the next webinar. Thanks for joining me today.